A new cycle of public works, the resumption clause, the new insurance contract law coming into effect, the still untapped private market, tax reform, and the growing use of artificial intelligence in the insurance market. What can we expect from the year 2026? To discuss this topic, we have the honor and pleasure of welcoming João Géo Neto, CEO of Pottencial Seguradora, the leading surety insurance company for the past 8 years. João Géo Neto, CEO of Pottencial, an insurance company that has led the surety insurance market for the past 8 years. João, thank you for accepting our invitation. It's a pleasure to have you here. Thank you.
Carol Senior, thank you for the invitation. It's a pleasure to be here talking with you about such an important topic.
Yes, absolutely. And to start our conversation, João, I'd like to hear from you. How do you see surety insurance within the economic outlook expected for next year?
Carol, surety insurance this year is a year of growth for us compared to the last 2 years. It might even be the year in which we've seen the greatest growth. This growth, in my view, is not... These are figures, but I believe it's largely due to the judicial surety market, so we haven't yet felt the impacts. Still thinking about the new bidding law, the PAC, none of that has come into play yet. So I think we're still in the judicial surety market, working a lot with judicial guarantees, large, high-volume guarantees, in short. We have a tax reform coming up, so that could also impact the market next year.
So far, we have the private market. When we think about private insureds, private contracts being guaranteed, it's still not very explored. In your view, what would be the main points that we as an industry could work on to change this reality?
Man, I think this is also just my opinion here, but, well, the first point, it's a fact. Brazilians don't have a culture of insurance. So I think that because there isn't an insurance culture, because of catastrophic problems, so we're starting to see these problems in the south of Brazil, but we don't have it yet. So there isn't a culture of buying insurance. So until recently, most people were more concerned about car insurance, and now they've started thinking about life and home insurance. And I think we're also going to go through this phase with surety insurance. Companies are requiring insurance from those who are providing services to them. So it's common in the public sector, but it's not common in the private sector. So the big companies, we see the big companies either purchasing or requiring the purchase of this insurance. For themselves, as beneficiaries, the big companies require it whenever they have a service provider. But it's still very occasional, with only a few companies requiring this insurance. So are there any contracts between private parties? That's also what we see in the cases that show up in the numbers in SUSEP's data. These are, in fact, private operations, right? Purchase and sale of energy, not really performance bonds, not those for execution or performance, right? So I believe the vast majority are purchase and sale of energy, M&As and swaps. So I believe these are the major deals that happen in the private sector. And I think there's still a huge opportunity for this market to keep growing, right? So the market, for example, the real estate market, already makes considerable use of the surety bond product for land purchase and sale, for swaps and so on, in a number of situations. Purchase and sale of energy is also another large market that is expanding and making extensive use of surety bonds.
Did you notice any specific change in the demand for surety bonds over the past year with the shift in the dynamics of the free energy market?
Yes, but at the same time, it's still a new emerging market that I think we need to study and approach with caution. You can't jump in too quickly because it's a very volatile market. We're talking about a payment guarantee, and it's extremely important to understand when we're dealing with the private sector and with surety bonds, something we've really prioritized within the insurance company. What are the clauses that can trigger the activation of the surety bond? So it's about really understanding what we need to have in place for the surety bond to be triggered correctly. A correct interpretation of what's written in the contract so as not to leave anything ambiguous for us, so that we, the insurers, don't end up caught in the middle of a fight or dispute between two companies. So in this sense, we end up being a bit vulnerable, and obviously we also can't just pay out indiscriminately, because if you pay incorrectly, you end up paying twice. So it's a certain concern, and I think it's part of a learning process. A learning process for the market, for the beneficiaries, for the policyholders. Even from a legal standpoint, with well-drafted clauses, well-made contracts, clearly showing exactly what can be considered a policy or not, what won't be up for debate, what is being called a policy. We pay, in short, I think this is a super important point, which we should, and here I'll make an important point, is that we should be reinforcing this issue. Where does insurance come into play, and what are its limits? And it's not a payment limit, it's the limit for coverage, for it to be activated, for there to be coverage, so that there are no problems with claim settlement.
Interesting point, John. So you think that Law 662 has been transforming the market a bit in this sense, giving more freedom even for the construction of specific clauses for certain private policyholders who already have a dynamic of contracting, of demanding surety insurance in their hiring practices. Then this movement has been gaining momentum with the greater freedom to negotiate between the parties and some important policyholders, even designing specific clauses and creating a dynamic, actually including surety insurance within a governance process to increase the guarantee.
I'm really pleased when we have the opportunity to sit down with the beneficiary to discuss this type of clause. It's important because then there won't be any doubt. We'll be aligned on how things are going to work, where our duties and obligations end, and where the other party's obligations begin. So I think this is super important, and it's really good when we have the chance to sit down and discuss this beforehand. So it really makes a lot of sense. I think that, of course, yeah, we don't need to sit down for every single case. We sit down, develop a model, figure out how it works, an ideal way for the product to function so that we don't have problems in the event of a claim.
And in this disconnect, right, between understandings, between what I'm demanding and what is actually being guaranteed. Yeah.
So as not to leave room for double interpretation, which I think is the main issue that harms the market and also harms insurance itself.
So do you think that for us to expand the use of surety insurance in the private sector would also require an educational process regarding insurance?
Absolutely, without a doubt. I think we need to consider how people will first gain knowledge about insurance, what it covers, what it doesn't cover. So it's a re-education about insurance, about policy wording, about what is allowed, what isn't, and what we should do. And
how much this dynamic even contributes to contract management between private parties, right? Because insurance will end up bringing in conditions where robust and effective contract management will be absolutely key. So this insightful conversation also significantly adds substantial value for various companies when it brings forth all this extensive and practical contract management experience, which is truly all the comprehensive and relevant evidence absolutely needs to be meticulously built up and carefully documented throughout the entire duration of the contract so that there is exceptionally good governance and truly effective management of all the associated guarantees.
No doubt about it, Carol. That really is very important. It's something that we've consistently been trying to strengthen and to build together because it is truly important. So that if a problem arises, we don't have an issue down the line. So I think that's the main point.
We saw this with public policyholders, how much contract management in public administration has advanced.
I usually say this because actually there was the old law, 8,666, which was known as the bidding law, and now we already have a new law. They were required to contract. So what did they do? They learned about insurance. What is the process? What do they have to do? That was very good. Today we have public agencies that know a lot about surety insurance. They had a lot of discussions with the insurance company, sat down together, created contract wording, contract clauses, what is allowed, what isn't. So when it's like that, it's very easy, it's smooth. So that's a good thing. And it was a re-education, it was an understanding, it was a greater knowledge that often brought all this information into public contracts. So today we have public contracts that are much clearer regarding surety insurance, what the obligations are, than private contracts sometimes due to perhaps a lack of knowledge.
You can see the refinement of the contract wording required by the public administration, usually as annexes in public tenders. The level of knowledge of the public administration is evident in the requirements for the guarantee.
Law 866 started in 1994, so we're already talking about how many years of experience in a regulated market. with a law that regulates it, that defines what it is. So this experience ended up, let's put it this way, this time also ended up being beneficial for the public agency, which is already quite familiar with the product.
And as the administrative process, which is carried out by the public administration, has evolved, it evolved over this time as a result of all the experience that was built together with the insurance market.
Yes, very much.
Interesting. And then we bring this experience to the private market.
Yes. And I think these are events, discussions, meetings, a series of things that can help the market develop.
Because the design of the main contract has a major influence
on the structure of the guarantee. We are guaranteeing
contract. Contract management starts with drafting the guaranteed contract.
We are guaranteeing the contract, so it makes perfect sense for us to sometimes even participate in the wording, how it is, what it is, so we can understand as well. So I think this is super important.
Interesting. Another point that for 2026, actually, it's not a new topic, right? 2025 is already here. With artificial intelligence taking on a leading role. In many diverse operations, the insurance market is actively absorbing and seamlessly bringing advanced artificial intelligence into its various different processes and into its numerous different interactions. I'd like to get a bit of your perspective on what you expect for 2026 in terms of the application of artificial intelligence and also a bit about the ongoing evolution in our market.
Carol, I've been joking inside the insurance company. I've been saying this. Wherever there's a click, there's an opportunity for artificial intelligence. So if we have to click a lot to open a screen, if we have to click a lot to move to another one, there's an opportunity there. But then thinking about it, does that mean that for everything that requires a click, we won't have anyone clicking anymore? No, that's not it. But at the same time, it's where we gain in agility, in experience, in quality. I think that's where we have a huge opportunity. We've been using a lot of artificial intelligence for lead generation, for example. So we start mapping out some clients. We have a robot that gets fed information and it keeps learning. How can I bring to a client, based on the history we have of that client, a possibility for them to be involved? Participating in a project, a bidding process, a contract, whether public or private, and at the same time as well. Today, we are able to monitor some of our judicial guarantee clients for whom we get authorization to monitor and see when they will need to present insurance for a specific legal action, whether it's labor, tax, or any other type. And then
you can support the client in a more proactive way, right?
Yes, actually, we're not just providing information to our client, we also inform the broker, who in turn reaches out to the client and generates a lead. So in this way, we create an opportunity for our partner, our client, and the broker.
Yes, it's a proactive business organization. Very interesting. And from my experience, I also thought it was really cool. What did you include in the experience of filling out the information? There are
a lot of clicks there, right? When you're typing, there are a lot.
It was really cool.
I think this experience here is nice because actually the person had to type out everything they had. So it doesn't really make sense. So you upload the document, we can read it, and we point out exactly where we pulled the information from within that document and what is the accuracy percentage. So when we had a really high percentage, we made it available to the market. We've actually been testing it for some time now, and there are other things, other initiatives within Pottencial that are happening with artificial intelligence, but I think, it doesn't stop, right? So every day we'll have an opportunity for improvement, improving the experience, the approach, the speed. So I think this is something that, let's say, is here to stay and will keep growing and evolving.
Whenever we talk about futurism and look at the horizons of artificial intelligence, there's also a lot of talk about replacing API integrations with agents that communicate with each other, which, if well designed, provides much more fluidity than an API, which is more rigid in terms of what you consume and what you deliver between two applications.
APIs today, for me, I'll tell you, I almost got in trouble once for talking about an API anyway, folks. But APIs are a complex thing, let's put it that way. I gave you a path, and if I change that path, you won't be able to access it. If you don't follow exactly the path I'm giving you, which is that specific path. So I think APIs are bound to go through a major process of evolution because right now they're kind of rigid. They lack flexibility. They can't go one way or the other, you know. And so any modification. So since we're always innovating, always launching a new system, changing platforms, changing structures, every time we do that, I have to change my API. And my partner also has to change their API. So I have a course for making all these changes, but so does my partner. So we're always stuck in that dilemma. We need to improve the API. We really do need to. It's very rigid. We still don't know what the right path is, the right effective one, but it's an area where we need to evolve a lot, not just within Pottencial, but all the other companies that use the API as well. We're going to need to.
Yes. And regarding underwriting, do you already use any tools with artificial intelligence in the underwriting process?
Yes.
Credit analysis?
Yes. We actually started, because I'm not going to talk about the major guarantee risks. I could even mention other products, but credit analysis. For an operation, let's think about it. For individuals, you can no longer have an underwriting desk, an underwriter receiving reports, analyzing them. It has to be something seamless. I need to approve it on the spot. Let me just make a connection here. We're talking about guarantees, but I'm going to make a link to rental surety bonds, which is like its cousin exactly. It's right there next to it. So what happens with the surety bond? If I can't provide information at the front end where the client is making the purchase, I won't be able to move forward. The competition will win, I'll be left behind. So here's the thing. Today we can approve with just a CPF right at the real estate agency at the front line. So with surety insurance, can we do that? We can. But of course, we have more structured operations. We need to have contracts. There are contracts, and the contracts aren't standardized. So we have to use artificial intelligence to bring to the underwriter a task that would otherwise be manual. So that's it. I think that's a major point we're bringing to underwriting, bringing it to the underwriter or helping the underwriter in the decision-making process. So pointing out where there are discrepancies, sometimes some information was provided that isn't there. So we've actually been applying all of this for some time now, to be honest. Honestly, it's not something recent, no. So what we call our automatic underwriting, which is a bit of what we're talking about here, it identifies for the underwriter sometimes when it doesn't approve, why it's not approving, what the issues are. And it draws attention in other cases to information that is missing or maybe inconsistent or that requires special attention sometimes anyway. So I think that's an important point. You
use it at first as if it were an internal control, right? The underwriter does the underwriting, but it highlights some points of attention. Is that it or not?
That too. We've been using this one for a long time. This one for a long time now. We've been using it for more than 3 years. Now, what we've been using lately is the following. How are you going to read, as an underwriter, let's say, a contract that's 100 pages long? So what are the important points where artificial intelligence can help? The underwriter. So there's a lot in that contract that doesn't relate to insurance, doesn't concern the obligations of the contract. It's other things like the glossary and so on, some other stuff. So in this way, artificial intelligence ends up helping the underwriter at this
point to direct their attention.
To direct their attention, to save time, to be more agile. So for our broker as well, for the client, they can upload, make an upload. They don't need to type anything anymore. So I think all of this is important, you know? We have a bot, we have Pathy, which is the one we created, our artificial intelligence, which is super cool, and we've been developing it a lot. We've even had her handle customer service. She has a mascot, she has stickers. It's really cool.
Cool. And in this?
In the next podcast, she could even be interviewed already, yeah.
Let's do one with her. And do you believe that in 2026, this interaction between artificial intelligence and the limit for sensitivity in underwriting done by an individual, by a professional who has experience, and how does this interaction between humans and artificial intelligence work? Every artificial intelligence needs to be taught, right? But do you believe that humans have this sensitivity when it comes to underwriting a more complex risk? Or that?
Carol, let me just add a point that I think is important. Several professions have ended
with
technology, with advancements, anyway, many of them, and many more will end. New ones have appeared.
New ones emerged.
But that's the point. Many new ones will also emerge with artificial intelligence. Many will end and many will emerge. Now, what I think is we are in the insurance market. The insurance market is a market based on reputation. We are giving you a policy for a possible problem in the future. So that's important. The matter of relationships, that's something artificial intelligence simply can't do. Emotion, they still don't have it. They haven't even come close to doing anything like that. So I think that's a key point. I know that you've also worked in the reinsurance field before. I think in every area of insurance. Where is it that our relationship with the reinsurer will be replaced? For them to know who is underwriting, how they're underwriting, whether they trust the rules being set, even for artificial intelligence to help with underwriting, that's impossible. It's not that it's impossible, but I believe it's very difficult for us to rely solely on artificial intelligence for this aspect. I don't believe that reinsurers will give much greater capacity to a company that's 100% technology-based than to a company that has experience, a team, and good underwriters. And remember, artificial intelligence needs someone to teach it. So we need to have experience before we just want to hire artificial intelligence. I think that's a key point.
I think that's a great point, and it puts you ahead of the game.
Just to remind you, all the relationships we have with our brokers, with our clients, it's impossible. Well, not impossible, but it's very difficult to have that, to replace that. I mean, we've known each other for, 14, 15 years, right? So it's hard. How do you, oh, João's not here anymore. I'll just talk to Patty, just like that anyway. Patty can be interviewed, but I think João also makes sense.
He'll definitely keep being invited. Good point. Excellent. I think in this race to bring artificial intelligence, it's about being careful with how it's applied, right? Very much so. I think in several aspects, right? To apply it where it actually adds value. At the moment when it's already mature, to avoid hallucinations and outlier responses it might give, because there's a lot of responsibility involved in what we do.
Yes, very much so. So like, of course, humans make mistakes too, so AI can also make mistakes, so that's not my point. But the point is, if it has a good teacher, if it has good guidance, it will be fine. So I really believe in artificial intelligence. Let me give you another example that just came to mind, which I think is interesting. For example, policy cancellations. What do we need to check? If the risk was actually canceled, do we really need only people doing this? No. It can help our team carry out cancellations in a much faster, smoother way, and even point out human errors, just as humans can point out errors from artificial intelligence. I think that's cool. Yeah.
I think the principle is working together, right? And a truly significant advantage you would have in this particular competition is a very comprehensive and substantial database history. Also, because for this teaching process, you have a lot of material in-house.
If you don't have data, it's very difficult. It's really difficult. So I think it's like that, and quality data, right? Reliable data, which I think is important. So, everyone has data, but having that data in a way that it can be processed, that it can be used, structured correctly, then everything works out. So this is a super important point. So creating a data lake is important. How are you going to extract this information? Who are the people responsible? Because if you have incorrect data, you'll keep making wrong decisions, which is really bad.
Excellent. And that is absolutely everything. There are two changes that actually recent ones. One that's about to come into effect now this December, and another one for which 20 policies have already been issued by the insurance market. So what's about to come into effect is the new insurance contract law, which comes into force now at the end of the year. It will already start transforming the year 2026. And the resumption clause, for which the insurance market as a whole has already issued 20 policies so far. And I'd like to hear a bit from you. What are the main challenges, and how are the insurance companies preparing for both things? Not only to adapt, since these are two separate matters, but also because they are interconnected, as one ends up impacting the other. When we talk about claims regulation and resumption, for example, these are topics that overlap. I'd like to hear from you how you see the resumption market. What have you learned in this first year-long cycle of experience? And what do you foresee for 2026 in this regard?
What we've seen a lot in the market is that actually the resumption clause applies to large-scale construction projects, right? Which is what is stipulated by law. So that's for projects above 200 and something million. So we haven't had projects over 200 million for some time now. So what started to happen, let's put it this way, is that municipalities, states, and so on are defining for themselves what constitutes a large-scale project, because you can't really compare. For a small city hall, 200 million is never going to happen.
And
sometimes a project of a certain value is considered large scale for them. It's important for them, for that city hall, for that state, for that municipality, in short. And we began in Mato Grosso, which I think was an excellent initiative, and now it's spreading to other states, to other municipalities as well. It's a completely different kind of guarantee. It's a guarantee where today the insurance company is required to pay 30% in case it doesn't resume the project or hire someone to resume it. As far as I know, up until now, we haven't had any cases, no claims where the insurance company had to pay or resume the project. We haven't had that yet, but it's just a matter of time. Sooner or later, we're going to have such a claim.
And
it's important for us to understand how the operations will work, how it's actually going to happen, how it will really be carried out. There are a lot of things. I think there are still some doubts that, in fact, and some things we don't even know could happen yet because they haven't happened so far. So I think it was a very good move. We just need to be careful about a few things because, for example, the percentage. We're going to apply the step-in clause, the resumption clause anyway, with percentages lower than 30%. That doesn't make any sense at all. So why doesn't it make sense? Even with 30%, it's already hard to resume a project. With less than that, it's impossible. So there's just no way you can resume a project with less than that. So it
fails to achieve its purpose.
The purpose, which is to avoid having unfinished projects to deliver, ultimately to be able to deliver. Of course, surety bonds aren't going to solve 100% of the problems. They'll solve some of them because they're not to blame for everything. So we have environmental issues, we have licensing issues, we have issues with lack of commitment. We have a problem, a whole series of other problems.
The
surety bonds might actually be the smallest factor among the causes of stalled construction projects, which I think is an important point worth mentioning. Now, speaking of, so I think that we're going to have a market. We expected the market to grow significantly, but we actually didn't have any major construction projects in Brazil in 2025. We had a few guarantees issued with the step-in clause, but for smaller guarantees, when the state or municipality legislates and changes what is considered a major project for them. And they managed to do it. And we're fine with that. We have no problem with it. I'm telling you a bit. This is more or less how the market is. The market agrees with this.
Now,
speaking of the new insurance law, this one really means those in charge give the orders and those with sense obey, right? So we have to hurry to make sure everything is ready and in order so we can start issuing. By January 1st, we'll already be ready. Actually, we're already testing some things. There are a lot of real changes to be made because besides the new insurance law, we also have the SRO coming in right at the start of next year, which brings a large amount of information requests and some things that weren't required in the past but are now being demanded. So I think we have a lot of operational work, a lot of work to do internally with the new insurance law, with the SRO, and even with the step-in clause. The step-in clause changes everything. You have to monitor the project. It becomes the insurer's responsibility. So create a structure, which is why there's so much to do internally. Create a structure to monitor, create an inspector, accredit inspectors, because sometimes you won't have a project nearby, say in the interior of Minas. Are you going to keep someone there? So you hire a third party to go there to do the inspection and so on. I think all of this is important. We already have this structure well mapped out and working. We haven't issued many guarantees for this purpose, but it is starting to become a very different process.
And are you truly ready to meet this amazing new?
Ready with reinsurance capacity, ready with a prepared structure, with accredited people, people who can help us make decisions, analyze proposals, analyze everything. Because in fact now, we even have to check if it's feasible to carry out that project at that price, you know? So it's a much more thorough analysis than what we used to do before. Not that before we didn't look at the contract, but now I want to know the following. Pottencial is doing everything. It's making a lot of sense. So we've created our own internal models to analyze these contracts anyway.
The availability also increases sixfold.
Much greater. And I think the point is also this. I think the closeness and the relationship between insurers and these clients will also change a bit. We will have to be much closer to them because I'll have to be monitoring, I'll have to be getting involved, and I actually have the right to do so. Actually, it's not just a right, it's my obligation to do this. So it's important for us to have a closer, more fluid relationship. And I also think that, as we said at the beginning of the podcast, this will be a period of learning as well. Just as we are learning about clauses, here we will start learning from our clients. How do we do it? What should we pay attention to? What shouldn't we? So it's also a new period for the insurance companies. And
this monitoring process also really brings about this closeness, right? It does.
A lot. It does. So I think it changes a bit of the dynamic of how the market works.
Excellent. The surety insurance market, the insurance market in general, is heavily influenced by the reinsurance market. So I'd also like to get your perspective on next year with so much happening around the world macroeconomically. A lot of political instability, potential major conflicts between nations. I'd like to hear from you how Brazil navigates this scenario, whether it's a period we expect to be challenging or soft. So when the world is going through these tensions and major catastrophes, usually Brazil has historically done well, attracting this capital because it has a significant domestic market, because it has an economy. This is highly relevant, and despite the recent catastrophic events that have occurred, there hasn't been any significant, any truly impactful, in terms of its overall scale, it absolutely does not compare to the truly catastrophic markets we have witnessed. So historically speaking, when truly major natural disasters or significant conflicts profoundly shake the foundations of Europe or North America, we invariably end up substantially benefiting here from this considerable capital that actively seeks a secure and profitable place to be carefully allocated and invested. And so I wanted to, that's the historical pattern, but history doesn't tell, that's my opinion about the historical pattern as well, right? It doesn't predict the future. I would really like to hear your perspective, since you're very close to the reinsurance market, representing the market leader in surety insurance, on what is expected for the next cycle in 2026. In terms of reinsurance capacity, market interest, especially in a scenario with so many changes.
So I can't really speak for the whole market, but I can talk about our experience and what I believe the market will be like next year. When we started in the insurance market back in 2010, we learned that it was a long-term market. The reinsurance market was even tougher because it was extremely long-term. So just to give you an idea, very few reinsurers have left our panel.
So
we have a very stable panel with several players who have been with us since the beginning. So, for example, in our second year of contract, we had 3 players. All 3 are still in our contract to this day. So we've only changed leadership once. So we've never had a change in leadership. I believe in stability, and it's not just about the country. I think it's a general stability. Our relationship, if you think back to when you were in reinsurance, is a stable one. Of course, we negotiated and all, but there was mutual trust on both sides. And we knew exactly where each other's limits were anyway. So we've always valued having stability, truly thinking long-term, and not wanting to keep switching for one business opportunity here or another there. We've always, of course, negotiations with reinsurers are tough, obviously, but in a way, I think this has brought us potential. It has brought a great deal of stability to our contract. So it's been a few years now that we haven't had any capacity issues. On our panel, we have more than 20 reinsurers. So the most relevant ones, let's say, those that are present in Brazil, all of them are eager to increase anyway. So I think it's not just about the market. It really depends on the stance of that insurer, on the stance of the market, on what you are doing, what you are delivering, what your track record is, what you have delivered in the past. So I think all of that is important. And, you know, no one can just start at stage 1 and jump straight to the last stage. Like I said, it's about reputation. You have to build that over time with the reinsurers until you can reach a certain level. Here, things are more fluid, easier, less tight. So we have a lot of trust from our reinsurers, and we trust them a lot as well. So it's a very, very strong, very close relationship. What we say there is that they are our shareholders. They just don't take part in the administrative expenses. Everything else, claims, commissions, everything, they do. They share a premium with us. So it's super important, and that's how we treat it. So every year we present what's happening, we talk about our strategy, we lay out the points, we share the presentations in as much detail as possible so that they also have confidence and continue to place their trust in Pottencial. And you know this well, how our relationship was.
No, I have no doubt about it. And that's really how it is. What is indeed truly exemplary behavior, if I may be so bold as to take the liberty to comment, is this longevity that you bring to relationships, and the fact that you have gone through so much together over 15 years of operation and so many adaptations means that in a scenario with so many changes coming next year, the reinsurer will obviously want to know, participate, and support, but will also feel comfortable and confident that just like with all the other challenges that have come up along the way, you will make it through to the other side. And you will build and learn from the challenges that may arise in the coming year. But in terms of market interest and looking specifically at your contract, I already understand that there is excess capacity and reinsurers wanting to increase their participation. But in general terms, from the conversations and concerns, I think I wanted to get a sense of the overall mood. Because some years the reinsurer is in a better mood, and some years they're in a worse mood. Are they feeling more positive or more negative? What's the general outlook on Brazil? Because Brazil, as I mentioned, usually navigates things well, but it also has its challenges, and they're not few. I'm not going to say that an insurer
is in a bad mood or a good mood. Do you think they'll see Brazil that way? Do you think it behaves well, or does it behave badly? So, and
then I wanted to... The way this group interprets things makes a big difference. We have the facts right there. And you can thoroughly interpret and analyze these complex dynamics, but the crucial question remains, how precisely are they comprehensively understanding Brazil's evolving role and its significant position within the broader global economic and political context, and what exactly is the prevailing and overall international appetite and strategic interest in engaging with Brazil, right? How are they seeing things? The
insurance market is a stable market. It's a market that doesn't like surprises.
Yes.
It's a conservative market. So, it's a market that it keeps track and knows that fluctuations happen, but catastrophic fluctuations, or maybe fluctuations at one point or another. But when we start to see a lot of fluctuations happening at the same time, it pulls back, and that's a natural reaction. We're even going to have next year the Rio event, which is the reinsurance event organized by Fundação, which I think is the biggest event we have in Brazil. It's really good. I think almost in our contract, I think almost all the players will be present here. So in Brazil, it's super important. But, sometimes we have some things that make them a little scared. So anyway, at the beginning, when we had the change here regarding the clause, not the clause, the bidding law, where we had the step-in clause, how is it going to behave? What is going to be done? So you see, the lack of knowledge also creates a certain concern because it's something new. This novelty brings a certain worry, and I think it's important for us to understand that and also share our perspective with the reinsurer, what we're doing, what we're seeing, because I think that's an important point. Because many times we only bring the problem, we only bring also the ugly picture, right? So I think it's important for us to also be building this together with them. And a few other points. We also feel insecure, don't you agree?
There are
some things that we don't know how they're going to be done, what they're going to be, or which direction they'll take. And then logically we end up pulling back. So when there are a lot of changes, they will pull back a bit. When the market is calmer, when the market has a growth outlook, when there will be less interference, I think that's when the market will be more supportive, when we'll have greater support from the reinsurers.
I see. Yeah, I think there's a period of uncertainty with these changes and with communication and transparency. How you as a market are preparing to deal with each of these changes is what gradually builds that sense of comfort, right? Yeah.
I think that's it, Carol. So it's not just Brazil, it's not just the company, I think it's a circumstance. of the whole situation, right? So for us to get to the contract we have today, it didn't happen overnight. Our first contract, if he hears this, he'll remember, we wrote more premium than we had capacity for. So it was built up over time. So I think it's a process of building until we achieve or reach those points that I think are important.
Great. João, to wrap things up, I'd like you to highlight a few points. The two main opportunities for 2026 and the two main areas of concern that are on your radar for 2026.
And just to clarify, we're only talking about surety insurance, right?
Surety market.
Surety insurance market. I think that we will have a big opportunity and will continue to have a big opportunity, especially in terms of understanding the tax reform. I think we need to understand it and see how we can support companies. There may be an opportunity to provide guarantees in certain matters in some discussions. I think that's an important point. And I also believe that the new bidding law has not yet progressed the way we would like, but I believe it will evolve. We've seen more and more a growing number of municipalities and states requiring the step-in or takeover clause. I have a lot of confidence in these 2 points. Anyway, I think there's still a lot to build in Brazil. So in general, I think surety insurance has a good growth outlook for the future in Brazil because we still have a lot to do.
So the significant opportunity point would be comprehensive tax reform. What exactly can be guaranteed and business opportunities? And what would be the point of caution?
No, I don't think it's caution. I think there are opportunities.
Well, takeover is also an opportunity.
Takeover is an opportunity, and we're also talking about the opportunity we have to be in Brazil because there's still a lot to be done here as an opportunity. So my outlook for next year is that it will be a good year for surety insurance. Now, thinking about, let's say, where we need to be careful, we're going through a time that brings a certain sense of uncertainty. And interest rates are very high. So a company that is leveraged, that needs cash, in short, is a company that could end up having problems and consequently could also impact surety insurance. So there is a risk of default, of not honoring commitments, of not being able to carry out a project or not being able to complete a contract. So this is a problem I see, and I think we need to be very alert to it. With this level of interest rates, it takes time. The wave of very high interest rates takes a while to start hitting companies. Up to a certain point, they can't keep stalling, pushing things forward, renegotiating, redoing things, and so on, and they end up facing financial problems, which directly affects surety insurance.
Understood. Wonderful. Regarding professionals, it's a market lacking professionals with training and experience in surety insurance. What do you think we could do with the market to help bring in new professionals and train people? Do you think this is the responsibility of the insurers, of specialized insurance brokers, of the institutions, or is it a combination of all of these?
Carol, let's go. Have you ever talked to college students in business administration or economics? Where do they want to go? Financial market. So I think it's like this. They don't know our market, the size, the strength of this market, the opportunities we have in our market. So I think that's what's missing, and it's very institutional. Yeah, because those of us who are in our market, I say this a lot, we only like what we know. Nobody likes the insurance market because they don't know it. So, people like to watch and all that. Anyway, the financial market, because it's there, it's in the media, it's cool. But the insurance market is also really cool. If it's not, then it's just like, if it's not more, it's the same, the financial market is insurance companies are a financial institution, in quotes. We're a regulated market, not a financial institution, but we're in a regulated market. So I think what's missing is more publicity about the size of this market, how much it gives back to society in claims, the number of jobs, how much of Brazil's public debt it carries, how much investment there is in insurance companies, which today hold a large part of Brazil's public debt. How much investment we have in technology, how much we have in people within our market, the number of brokers we have working and selling various types of insurance, auto, life, health, and so on, a whole range of other things, capitalization. So the market is very, very large. I think what's missing is marketing. We're lacking advertising to bring young people in so they can get to know a bit more about the market and about insurance in general. Let me make a very important point here. We have an internship program at Pottencial, and we promote it we have it here in São Paulo and also in Belo Horizonte. And then, always looking at efficiency and so on, I said, I wanted you to show me how are the results. This was last year. Our results are spectacular. We are able to hire 67% of all interns who have gone through Pottencial. We have underwriting managers. We have managers in various areas, communications, HR within Pottencial, who started as interns. Their first job was here and they're still with us today. So I think there's a lack of knowledge about the insurance market for us to be able to have that, so we can bring the largest number of people into our market.
Wonderful. I liked when you defined marketing, because it really is that we're missing out on communicating how cool we are, right?
We're not communicating enough.
João, thank you so much. It was a pleasure talking to you and getting to know your perspective. For next year, just a little summary of how you saw the year 25. Thank you once again for your time and for the opportunity to have this conversation.
I'm the one who should thank you, Carol. It's a pleasure to be here talking about the market. I think we're lacking marketing. We really need to invest in this kind of channel so we can show the market how cool we are.
Great. Thank you so much for your support.
Thanks, Carol.
João Géo Neto, CEO of Pottencial, an insurance company that has held the leadership in the surety insurance market for the past 8 years. With 15 years of experience in the market, Pottencial was founded with the mission to simplify and automate the surety insurance issuance process in the country, as well as to support its partners throughout the entire journey. An administrator with a specialization from Fundação Dom Cabral and director of the National Federation of General Insurance, João has been transforming the insurance market for 15 years.